Welcome to Behind the Advice, the podcast for Australians living abroad who want to maximize their financial situation. I'm your host, Mitchell Kelsey, a financial advisor at Runway Wealth Management. And in each episode, I'll be sitting down with other experts and professionals to get their insights, stories, and expertise on key concepts for Australian expats, as well as providing my own perspective. With this being a financial podcast, there is a disclaimer, so any information that you hear in today's episode is general information only. It is not personal advice, so it does not take into account your personal situation, goals, or objectives. If you do need personal advice, feel free to reach out to us at Runway Wealth Management for personal financial advice. Welcome to another episode of Behind the Advice. The episode today is navigating the lending landscape in Australia when buying property as an Australian expat. Now, buying property in Australia is a goal for many Australian expats and usually requires a loan or finance of some sort. And hence why in today's episode, I've got a lending specialist to walk us through navigating the lending landscape for Australian expats. So in today's episode, I'm really pleased to be joined by Joe Perrone, who's a finance broker and partner at Ortus Financial. Great to have you on the episode today, Joe. How are you, mate?
Great. Thank you for having me.
Great to have you. It's going to be super insightful for our listeners to get your insights on the lending landscape here in Australia, particularly for Australian expats. So tell us a little bit about your background, mate. How'd you get into the industry?
Sure, yeah. So, look, I grew up originally in New Zealand, in Christchurch, and I have always been in finance. So I worked at the Bank in New Zealand. I've been in Australia now for nearly 20 years. A lot of that in Sydney, more recently the Gold Coast, and here it's always been in banks. So St. George first, and then Macquarie before joining Ortus.
Okay, excellent. Excellent. And what kind of led you to get into the industry in the first place?
Look, I dabbled with a law degree.
Okay.
I found it too hard.
Yep.
Sure. too boring. Sure. Look, I always enjoyed economics. I'm reasonably good with numbers, and the combination of working with people and solving problems with what I felt I was naturally okay at.
Yeah. Okay.
Sort of came together, and that's where I am.
Sounds like it sounds like a natural fit then.
Yeah.
Let's get into the episode, and let's start by kind of looking at the lending landscape for expats in particular. And I mean, I'll ask the question: can an Australian expat get a loan in Australia?
Yes, the answer is yes. Probably be a short podcast today if the answer is no.
That's right.
Yeah, look, all of the main banks in Australia will lend to an Australian working overseas. There's also a good range of, regional banks, smaller banks, and non-bank lenders. So yes, you can. Okay,
that's good to know for our listeners. Can you walk us through, I guess, some of the lending policies for expats, and I guess how they kind of differ from a lending policy for a regular Australian here in Australia?
Yeah, I think to start, it's important to sort of understand the approach of banks and lenders. Broadly speaking, they're assessing lending for property purchases in two categories, right? So the first thing they're considering is the asset or the security for the bank. What's the property worth? Where is it? And then ultimately, how much will they lend against that property? That's effectively the same whether you're an Australian-based borrower or an expat. The other side of the equation is the income, right? So once a bank or a lender has established a loan, you got to afford to be able to pay the payments. So there's an interest cost, there might be principal reductions. So that assessment really is the complex part these days. There's a lot of control, regulatory oversight as well that dictates banks how they need to assess whether someone can afford that loan, right?
Sure.
Borrowers already have a fairly tough calculation to deal with, right? There's a lot there to consider, but the key thing is with the interest rate you end up with on a loan, let's say it's 6%, banks are obliged to calculate repayments as if it was 9.
That's right. There's that buffer there, the serviceability buffer.
Exactly right. So, what expats have to deal with on top of that is some extra hurdles and some extra calculations as well.
Sure. Let's kind of expand on that a little bit. So the serviceability element for expats. So let's think as an example, does their currency, does their country kind of impact that serviceability element? What kind of other factors as an expat does the lender kind of look at and say, we're going to apply some limitations there or restrict this borrower?
Yeah, so again, thinking from the perspective of the lender, they are assessing risk, the risk that you might not be able to afford the loan or you won't pay.
Yep.
If there's a borrower who is a PAYG employee in Australia, that is a slightly lower risk than somebody who lives overseas and earns money overseas in a different currency.
Absolutely.
So the policies banks have are attempting to cover for that slight difference in risk. So the obvious one is the currency.
Yep.
Right. If you live and work in the US and you are paid in US dollars, but the loan is in Australia and it needs to be paid in Australian dollars, it follows that money needs to transfer across. And from the lender's perspective, that exchange rate can change. So if they assess what you can afford today, but the exchange rate moves, then you may not be able to afford that, even though you're on the same salary.
Sure. And then they're probably looking more favorable at more advanced and, I guess, stable currencies like the USD, the Euro, the pound, things like that, and less so for maybe some of the emerging countries, emerging market countries.
Yeah, that's right. They generally sort of group them into categories. Most banks and lenders are tolerant of a lot of, or a fairly broad range of currencies now. So like you say, US dollar, British pound, Canadian, Singapore, Hong Kong, Japan, New Zealand. So these kind of relatively stable economies and currencies get the same rules applied.
Sure.
Where it can get more nuanced and challenging is when, it's a smaller country, the currency moves around more. And look, it's the same for commercial and corporate lending. Some countries will be excluded entirely.
Sure.
Right? There are rules around sanctions, political instability. So yeah, you got to work through that.
Yeah, absolutely. And I guess of those factors, is there one, like, what's the most challenging aspect of being an Australian expat when it comes to getting a loan? Like, what's the main factor or the primary factor, I guess?
Look, fundamentally, you are probably going to end up with a maximum lending capacity lower than an Australian-based borrower.
Sure.
And that's because to cover for that potential currency movement, banks will take your income, convert it to Australian dollars for their calculation, and then reduce that, right, by a set ratio, usually 20%, sometimes 30%, depending on the country.
Sure. Okay.
So you're dealing with a calculation where the rate is already 3% higher than reality, and then your income is now 20 or 30% lower than reality.
Right.
So combining those factors, the loan you can potentially access is probably lower than you might think or what you can actually afford.
Yeah. Okay.
That's the key challenge.
Okay. And I think, for first time, or not necessarily first time property buyers, but when you go to buy property, generally the first step is to get pre-approval. So the pre-approval process for an expat, that follows the same kind of process, but I suspect there's an additional level of assessment on the income serviceability standpoint.
Yeah, absolutely. It takes longer, and there's more work.
Yeah, sure.
But it's a great step. Anybody who's contemplating purchasing should start early, and having a formal pre-approval in place is going to certainly give you more certainty. Look, it's effectively the same process, right? They are gathering information, or we as a broker potentially gathering information to run those two key calculations. What's the potential property worth? How much do you need to borrow against it? And then critically that income piece.
Yeah.
And when you work overseas, you have to provide more documentation.
Yeah.
to verify the income, and that can add some extra delay.
Yeah, sure. And you made a good point there. I mean, the first step, if you're looking to get into the market, and this is what I tell my clients, if you want to get into the market, you want to understand what your borrowing capacity is, because that naturally is going to dictate your budget. It's going to dictate what deposit you need to get into that property, and it's going to dictate the serviceability as well, and what that looks like, post purchasing a property and having a loan.
Yep.
You mentioned, so we talked about some of the challenges of getting the loan in the first instance. What about the interest rate itself? So on the loan, are expats tending to be subject to a higher interest rate on their loan relative to someone based here in Australia?
Usually not. No.
Okay.
Once you navigate that process and you can get that pre-approval or approval for the loan the bank determines you can afford, you should access the same discount and the same product around that loan as an Australian borrower.
Sure.
Where it might be different is when it's particularly complex. So there are different policies, for example, for self-employed expats. Right? So if you're running a business overseas, some banks won't do that at all. It's a higher level of analysis for the bank. There's more risk potentially. So you may need to then access a lender, a non-bank lender.
Yeah.
And for that, you probably pay a premium on the rate.
Yeah, sure.
That's true of Australian borrowers as well.
Yep. And that's something we didn't, we can touch on with the assessment process. Your employment type plays a role in it as well. If you're employed as an employee, it's probably maybe a little bit easier, I suspect, than if you're a business owner kind of operating your business outside of Australia.
Look, it's definitely easier. Banks are better now at being reasonable around what they assess for a self-employed borrower.
Yep.
But yeah, with the added complexity of the currency and generally speaking, banks can form a view about how certain industries and businesses will perform in Australia because they understand the market. But, banks have less data on how whatever the business might be performs in Hong Kong.
Totally.
Right? So
totally.
They're going to do more inquiry, try to understand what they're comfortable with.
Yep.
Drags out the process.
Yeah, sure. Let's talk about maybe some of the other features that you might have with a loan here in Australia. So, for example, a redraw facility, an offset account. These are quite popular features that most Australians have on a loan, whether that's an investment loan or a home loan for Australians living here in Australia. Can expats still access features like this with their loan?
Yes, they can. Once you've navigated through that approval process, the end product, the loan you should have or get access to, it should be the same. Right?
Sure.
So it can come with an offset account, redraw capacity. Look, I would just suggest that there is more to consider around an offset, for example, and ultimately whether it's a beneficial tool or not, right? And there are factors about being an expat that might mean it's less attractive than for an Australian borrower, right? So you've got the benefit generally of an offset is that you're parking free cash against a loan balance that you have access to when you need it, and it has the effect of reducing the interest cost. Now, if that's an investment property because you're living overseas and that interest cost is potentially deductible, then offsetting it may not be the best use of that cash. The interest rate, the effective interest rate is actually lower than the headline.
Absolutely.
After the tax benefit is included. So perhaps keeping that cash overseas or directing it to some other purpose where you can earn more, and it's maybe more your world, might be the right play.
Yeah, absolutely. And I think if you're thinking about an offset account for an Australian expat, an expat's usually buying property in Australia for investment purposes. So it's not going to be their main residence naturally. So in most cases, that interest expense that you're incurring is going to be tax deductible. So if you've got a an investment loan and it's fully offset with cash in the offset account, you're not getting any benefit in terms of that interest expense being tax deductible. And as a Australian expat, in most cases, you're a foreign resident for tax purposes. So this means that the rental income that you're deriving, assuming this property is rented out, the rental income that you're deriving from this property is going to be taxable in Australia, and you've got those foreign resident tax rates. So you're paying, 30 cents in the dollar for each, dollar of rental income you receive. So it's wise and tax effective to look at. It sounds a little bit counterintuitive, but you want to increase your expenses. You want to increase your tax deductible expenses, and the biggest one for expats is your interest expense. And some of the strategies we work with a lot of our clients is looking to, instead of parking substantial funds in the offset account, looking to use those funds for other purposes, such as investing in shares, exchange traded funds, managed funds. Some really great tax benefits for Australian expats for doing that. And it can be a little bit tricky initially to kind of get your head around that, because the benefit doesn't actually come until you file your tax return. That's when you realize, like, okay, I understand why we've been incurring these interest expenses. Our tax, we've got a tax refund this year, or we don't have a tax liability this year here in Australia. So it's a good point you make in terms of the offset account. Yeah.
I mean, look, we always encourage people we speak with to take a long-term view. We want to work with them well into the future. So being transactional and just thinking about that headline, the interest rate's 6%, so I'm saving 6%. That, it's not really the case when you dig deeper. And that equation of opportunity cost, what else might I do with that cash and what could I earn on it versus the actual cost I'm saving, that's going to get more and more attractive or in favour of potentially using it elsewhere as rates come down.
Absolutely.
So definitely worth thinking about.
Yeah, and it's not to say you shouldn't have an offset account. You shouldn't park funds in the offset account. Like it's a great place. You're probably going to save more interest by having your cash savings in an offset account versus in a savings account, for example,
Correct.
where you might be getting 3 or 4%. So it's definitely not to discourage putting funds in the offset account, but whether or not you have a substantial amount in there, that there may be some better options there for sure.
Certainly available as an option though.
Yeah, absolutely. Let's get into, I guess, buying property for expats. So I guess for someone for Australian expat listening to the podcast today, that they've not bought property in Australia, what's usually the first step that they should take?
Look, prepare early, start the process early, right? Like I think there's a common theme here. You can certainly access lending as an expat. You're probably going to end up with a similar outcome to Australian borrower, but maybe not quite as much. But the process to get there is going to be more involved. So start early, right? And the first step really is determining that borrowing capacity. You can't go shopping for something if you don't know how much you got to spend.
Absolutely.
And it might sound self-serving, but I would suggest using a broker, whether it's Ortus or someone else. Mm-hmm. There are tools you can use online to estimate potential borrowing power. It's a good start. But to navigate the complexities of expats, get someone working on your behalf. From there, once that's determined, you're starting the process of sorting through options and selecting a short list of properties. And, it probably seems obvious, but if you're overseas, there are a lot of steps there you can't do yourself that you probably should, right?
Yeah.
Inspecting a property is the obvious one. So I would suggest a buyer's agent as a useful advisor is particularly relevant for an expat.
Yeah, and I would agree with that as well. I mean, firstly, understanding borrowing capacity, absolutely crucial. And then, buyer's agents have kind of risen to popularity, particularly over the last 5-6 years. I think, for most people, might not necessarily know what a buyer's agent or a buyer's advocate was 10 years ago. Do you want to just give a quick high level in terms of what a buyer's agent is and how they can help?
It's a really interesting space that's evolving quickly in Australia. in the US, pretty much every real estate transaction has a professional agent working on both sides. And I've always found it a little odd that that hasn't been the case normally in Australia. You have somebody making potentially the largest purchase of their life with emotions involved, and they are negotiating with somebody who is a professional who's done this day in and day out, and it's asymmetrical.
Absolutely.
Right.
Yeah.
And that's just the negotiation piece. Right. A good buyer's agent is providing a lot of value all the way through from the analysis of what you can afford, through sourcing opportunities, assessing DD, right, coordinating building inspections, pest inspections, providing data about areas, schools, through to that negotiation. And look, you got to find a good one.
Yeah, true.
But I would suggest, particularly for an expat, the cost of a buyer's agent, you're going to make up many times over by having the right selection at the right price.
Yeah, and I would agree with that statement. I think they're super invaluable particularly for Australian expats, where you can't necessarily inspect properties in person. And ultimately, a real estate agent is acting for the vendor, for the seller.
That's right.
In 99.9% of scenarios.
Yeah, or for themselves.
That's right. Well, no, we won't speak to all agents in that respect, but yeah, that's right. Let's change gears now, and let's kind of look at the, we talked about interest rates before for expats. So, the rate that you're getting as an expat, not necessarily, higher than a regular Australian when they go for a loan. Where do you see the outlook for interest rates over the next 12 months?
Look, I think they're coming down. It's not a particularly bold prediction. I'm aligned there with most economists and banks. I think predictions range between 2 and 3.25% cuts within the next 3 to 6 months. It's a lot of external factors.
Absolutely, yeah.
Political tariffs that may change that.
As we saw last month, right? Where it was
a bit of a surprise.
That's right, yeah.
Yeah, and it's never certain, but this next decision next week is feeling very likely to be a cut. I think that's a good thing. We touched on the conservative calculation banks are obliged to perform to determine how much you can borrow, and that's quite restrictive. So a rate cut improves the output of that calculation, and that's more borrowing power. And that's true for an expat or an Australian. Yeah,
so that's encouraging for expats to hear. I guess the effect of that, it tends to be, you see property prices kind of move higher as well. So you get this increase in borrowing capacity, but equally it's usually an increase in property prices to some extent. That's right. And look, again, it's not not swimming against the tide here to suggest Australian house prices will probably keep going up. Look, the basic factors remain. There is an increasing population and limited supply. And supply of new housing has been running behind what's required for a number of years. So there is not just a shortfall, there's a catch-up needed. Those factors keep prices stable or rising. Then you overlay the impact of reducing interest rates and higher borrowing power. So you've got lots of people on the buy side with more ability to buy and supply not keeping up. I mean, it's not a complicated calculation to say that probably means prices rise. Yeah, that's right. Just not enough supply coming to the market. It's ultimately a supply and a demand story. And I think it's very much built into the Australian psyche that property prices will go up, and that kind of just perpetuates over time. You've got a lot of the boomer generation kind of, saying that to their kids, like, get into the market. It just, property just goes up. And that's been, true over the long term. There's definitely been periods though where markets haven't necessarily increased in value. I think that's the key, right? Over a long enough timeline, the value of these assets will go up. You still need to be mindful though of,
you cannot really categorize Australian property as one bucket.
Very true.
Right? Like regions are different, suburbs within different cities are different and perform differently. I would suggest, there might be opportunity for higher than system price rises in Melbourne because it's been underperforming for a while and seems now comparatively cheap to Sydney.
Mm-hmm.
I think Queensland has great underlying trend factors, right? The population growth, lots of infrastructure spending, the Olympics coming. The reality is prices have risen a lot in Queensland. I think about the Gold Coast here. Prices have gone up a lot.
That's right.
Right.
Yeah.
However, you can still buy twice the house for half the price as you can compared to a lot of places in Sydney.
Yep.
And it's a momentum thing, right? The population rises to a certain point, the city becomes more attractive, there's more jobs. So I think it's still got more to run. But there's definitely downside risk in certain areas too.
Yeah, totally. And it's a good point you make, right? Like for some suburbs, or not suburbs, but cities, capital cities, regional areas that maybe haven't performed as well as Sydney, for example, they're going to become more attractive.
Yeah.
And they're going to get more demand that's going to like compound their growth over time as well, for sure.
I think people are more mobile and willing to relocate now as well. So we had, post-COVID, a big uplift in the amount of people moving, right, to the Gold Coast in particular, but lots of regional towns. And then that's pulled back a bit, right, as the requirement to be in the office more, people kind of not perhaps enjoying it as much as they thought, then moving back. But the underlying trend is still higher than it was pre-COVID. And, doing client meetings on Teams, people are more comfortable interacting with someone remotely. It just encourages or provides a base for people to shift. And when that's true, that's just a bit more in the machine there that means a smaller location or an underperforming location might get the uplift they wouldn't have historically.
Yeah, absolutely. And I think it also comes back to buying the right asset as well. So many different facets to buying property. You're buying an apartment, a townhouse, a freestanding house.
Great point.
How many bedrooms? Where's it located? Is it near major infrastructure, schools? There's so many facets that add to the prospect of, or the potential for the property to increase in value.
And there's no denying either that prices are high, right, in Australia compared to income, and much higher than they used to be.
Yep.
And it doesn't look, Australia compared to other countries is expensive in that regard. But I always maintain that it's got a lot of fantastic good points as well, right? It's relatively safe, it's stable, the weather's good, there's got job opportunities, low unemployment. So it's hard for a lot of people to buy, and that's why that process we talked about earlier is so important. You start with understanding what's genuinely affordable.
Yeah.
You get some good experts around you to help make sure you're selecting that right type of asset.
Yeah.
And then you're doing the best you can within that.
Yeah. And there can be a lot can go wrong with buying property at the same time as well, right? Like not a lot of assets, not every property is going to increase in value. And then you can have some fundamental things that just go wrong with the property. You might have buying into an apartment, it's got concrete cancer, there's a special levy that has to get raised. Like that's going to eat into your cash flow straight away. You might need to do some major renovations. Like you need to think about it. It's not a simple decision in that respect.
And you can't mitigate all those risks entirely. And property is an investment. It's a very emotional investment, particularly if it's something. If you're an expat and you intend to move back and live in that property eventually.
Absolutely, which is what a lot of them like to do,
Yeah, you're contemplating it as a home, not just as an investment. So balancing those considerations is tricky. I think, like making any investment, you've got to get comfortable with your own risk appetite first, how much you can afford, how much you're willing to allocate to that asset class, that property, and then trying to make a sensible decision within that. You can then use data building inspection, buyer's agent to try to mitigate that risk. Anybody who goes into a property purchase thinking, this is how I can get rich, right? I can get something at a discount and quickly turn it around into a profit. It's usually a recipe for disaster.
Absolutely. And I think also taking a long-term view, like ultimately it's a risk asset. It will do well over the long term, but you need to be prepared to hold it for the long term. And the long term for a lot of people is maybe just not understanding the long term. Long term is like 5, 7, 10 plus years. That's kind of the investment time horizon. What we're looking at, we're not looking to make a profit in 12, 24 months time necessarily. I guess that's the mentality you want to kind of have.
The risk with a property investment you expect to make and then sell within shorter than 5 years is it's not long enough to see through a cycle. Mm-hmm. So you're dealing with potentially getting the timing wrong. If it happens to be that the world changes and rates start going up again in 6 months' time and prices come down and you've bought it what turned out to be the top, it might take 5, 10 years until you're making your money again. And typically over 10 plus years, property is a good returning investment.
Agreed.
But it may not be in a shorter timeline.
Definitely. Let's kind of round out this discussion. I'd love to just get your top tip for an Australian expat that's looking to get into the property market.
Yeah, look, I mean, it comes back to the reality that you can certainly access lending. Mm-hmm. There are lots of good options, more than just the banks, but the process is going to be more involved and take a bit longer, right? So, again, you can rely on an expert. They will do a lot of that work for you, but getting early, getting clear that you know what you can access is the key first step.
Yeah, some really good points there. And I'll just add from a financial advisor standpoint, for Australian expats, there's some tax nuances when you're buying and owning property as an Australian expat, particularly around your tax residency status. So just getting educated on the tax implications down the track as well. If you do intend to sell the property down the track, understanding what you might be in for down in the future. And then also from a year-on-year basis as well, like we talked about, we had that conversation about the offset account but before and how the rental income is still going to be taxable in Australia. So you really want to position the property in a tax optimized manner as well. And that's something, I myself as a financial advisor absolutely can help clients with. Sorry, you go.
Yeah, no, I think it just reminded me as well. And look, jumping back to that servicing calculation, right? Like as an expat, you're dealing with a buffered interest rate, you're dealing with the income being converted to Australian and then reduced potentially by 20%. Something else to look out for is that the ultimate calculation is usually performed on the after-tax income. Right? So if a bank takes the gross salary you earn in, say, Singapore dollars, converts it to Australia, reduces it by 20%, and then applies the Australian tax rate, you're going to end up with a pretty small number, right? So there are lenders, and Bank West has done a great job on a couple for us recently, where they perform the calculation for tax on the local tax rate, right? And Dubai, Singapore, there are places with really comparatively much lower income tax rates.
Definitely.
So when you're already dealing with a lot of limitations or reductions on your income, that can be a massive swing factor.
Huge. Yeah.
So it's just another thing to consider in the process here, and a good reason for why you want to start early, find the right help.
Professionals, yeah.
And to weave through all those different rule sets at different banks.
Absolutely. All right, Joe, we might round out the episode there. That was a super insightful conversation. So thank you so much for coming on the episode today. It's been super insightful. Thank you, mate.
Yeah, great. Lovely to chat.
Thank you, mate.
Thanks.
All right, guys. Thanks for tuning into today's episode, and we'll see you in the next one. Thanks for listening. Thanks for tuning in to today's episode. If you want to learn more about Runway Wealth Management and how we help Australian expats, feel free to jump onto our website, runwaywealth.com, and we're also on all the social media platforms.